What's up, guys, and welcome back to my YouTube channel. Right, a lot of you have been asking about the strategy I used to trade gold. Well, in today's video, I'm going to be showing you the strategy I used to trade gold and the one you could also learn to become profitable trading gold in 2025. Let's head straight to the screen. Let me show you the simple strategy I used to trade gold in 2025.
So guys, here is the simple strategy I used to trade gold. I'm going to go straight to the point so you get to understand the strategy I use in trading gold. It's not that complicated, right? I'm going to try as much as possible to go straight to the point so as for you to understand how this strategy works, right? Now, first off, like before you even go to your chart, we normally do top-down analysis before we know what we should be looking out for. But first off, you need to understand how market moves, right? Now, one thing with gold is that gold respects levels a lot, key levels, supply and demand zones, support and resistance, you understand? However, you might call it, but gold respects these levels. You understand? I call it F and R zones because of how I mark them out. I know a lot of you might have heard people say things like F and R zones and all that, right? So now it's because of how I draw them personally, right? So now, first off, what you should know, right, is you need to know the direction of the market first and how these trends works too, right? How market trends work, right? So first off, in an uptrend, market creates series of supports, higher highs and higher lows, right? Higher highs, higher lows, higher highs, higher lows, right? And continues to the upside. In a downtrend, what happens? Market does quite the opposite, right? Create series of supports, lower lows and lower highs, right? Lower low. Why is it lower low? Because this new low is lower than the previous one, right? And lower high, right? So that's how market creates the structure in a downtrend. Now, this is basically what we do because it's our first wave pattern on gold, right? This is the first wave pattern I use to trade gold. Personally, we have like 4 different wave patterns, but this is the one I'm going to focus on. And if you can focus on these and understand how it works, because it's not all about knowing all, but trying as much as possible to master one and be very good at it. Now, there's this quote by Bruce Lee that said he doesn't fear a guy that does different kicks 1,000 times, right? But he fears, I think, a guy that does one kick 1,000 times, not the one that does different 1,000 kicks. You understand? So that's one thing. It's just you understanding how this thing works and then mastering it perfectly so that you can get good entries with it. Now, in an uptrend, this is the structure you see in an uptrend, right? So now, according to technicals, it's more like history repeating itself. So anytime market takes out these recent highs, right? Any high created, because this is what an uptrend is permitted to do. Market is permitted to take out highs, right? So anytime market takes out high, what happens? You notice that market comes back to retest, right? Anytime it creates highs like this, takes it out, and most of the time changes those resistance level towards support zones, right? Anytime it creates a new high, we know that what should we be expecting? That the market should change this resistance level that was previously a resistance level to now what's a support for it to know what now continues to the upside, right? So now the concept of how I trade good is either a retest, like break and retest, or an immediate break, because most cases market doesn't come back to retest. It might just stop halfway and continue to the upside. But the fact that we know that long term, this is the structure market has been printing, and according to technicals, it's more like history repeating itself. So we know that clearly, if market gets to this particular point, what are we expecting? A pull to the upside. But now, does it mean we should take those trades blindly? No, that's where all that stuff comes in. Now, a strategy, we have different components that makes up a strategy, right? So we have things like the neckline break. We have things like candlestick patterns. The neckline break is also a chart pattern on its own, right? So I'll try as much as possible to explain this. Now, at this entry point, these lines you're seeing here, I call them my F and R zone because of what? How I mark them. You understand? I call them what? F and R zones because of what? How I mark them. The full meaning of this F and R means frequency and what recency. Is it a recent level? Yes, you can see from this figure, it's a recent level. And if you look back, it might be a frequent zone where market has reacted multiple times. You understand? So is it a recent one? Yes, tick that's number one. It's a recent level because most of the time Google respects recent zones very well, right? So that's that. And recent, the F here stands for frequent and the R stands for recent, right? The recent is our point of entries, and those frequents are most of the times our target zones. Sometimes we pick trades from those frequent ones because why? when market comes to this particular point, because gold respects zones very well, we know that it will do what? It must react, right? So now, where do we look at from this one? I'm not going to be doing a top-down analysis and all that, but I'm just going to go straight to the point because I have videos already where I talk about the strategy and all that. You get, I have like live classes where I talked about the strategy, but I'm just trying to break down the strategy again. So what you can do is go back, watch those live classes. I've talked about the strategy. I have a series that I talk part 1, part 2, part 3 on the strategy. So I don't want to bore you guys with the strategy again. But now I'm just going straight to the point. Now, what do we need to see at this? Because it's one thing to just maybe market falls here and do what goes beyond that particular point. So what do we need to see at this particular point that gives us extra confirmation if we should be going for that buy fully? And when I say fully, I don't mean you should go full margin, no. Proper risk management. Because there's nothing like how will I even put it? There's nothing like 100% win rates. Most of the time, where you get 100% win rate might be in a good week, a good month, but it doesn't mean that the next one might be the same because win rates is not stable. It fluctuates, right? Because some months can be good and some months can be bad. So that's why it's always advisable to use proper risk management at all time, right? So at this particular zone, what do I need to see for me to know that this zone would hold? What do I need to see to tell me that what this level would hold? That's where the neckline break comes in, right? That's where what comes in. The neckline. Sorry. Let me reduce the fonts a bit. I think that's a bit too low. Okay. So that's where the neckline break comes in. Now, this neckline break is also a chart pattern on its own, and also that's where candlestick pattern comes in. So, but in this video, in this particular video, I'm going to focus on this first one, which is the neckline break. Now, according to the neckline break, what we need to, I will go show you live examples, maybe 2, and then I think that's it. At least you can go back test, then come back, let me know. You understand? You can also open a demo account, try it out, you understand, and also come back and let me know your results. You see that it's really a game changer. Now, this neckline break, I want to explain everything before we go on the chart. Now, this neckline break also works with how trend moves. Now, in an uptrend, this is what market does in an uptrend. In a downtrend, it does what? The opposite, right? You see, in a downtrend, market changes what? Previous support zone to what? Resistance level and what? Time down. So according to this structure, we know that since market has created this level and broke out of it, what we expecting? A retest on this particular level and a continuation to the downside. Now, in an uptrend here, like we see here, market is permitted to do what? Take out highs, sorry. Market is permitted to do what? Take out highs. Whenever it creates a high, what happens? It does a minor retracement, then what happens? It takes it out. Retracement, break. Retracement, break. It's permitted like perfectly for market to take out highs in an uptrend. Now, in a downtrend, it's quite the opposite. Market is only permitted to do what? Take out lows. Whenever it creates a low, it retraces, takes it out. Creates a low, retrace, takes it out. Now, in a downtrend, market is not permitted to be taking out highs. Now, if market takes out the first high, right, retraces, takes out the second one, then it should signal something to you that this market is not going down again. There is something happening. There's a change here. You understand, in this particular structure, because in a downtrend, market is not permitted to create structures like this. It's not supposed to take out 2 highs. The least it could do is take out the first one, maybe respect this particular level, right? Take out the first one, maybe respect this level and do what? Continue to the downside, right? So, but in a downtrend, market is not permitted to take out highs. Now, the same thing for the uptrend too. Market is not permitted to take out lows. If it takes out the first one, okay, let's say since go respect zones, maybe it's moving to the next zone to respect this one and maybe continue to the upside. But if it creates maybe retest of this particular point, takes out the second time, the second zone, then it should signal something to you that this market is not going up again at this particular moment. You get, there is something happening. There might be a change from this particular uptrend to a downtrend, or from this downtrend to an uptrend, right? So now that's what brings us back to this neckline. Now, at this point of this our entry, what do I want to see at this particular point, which is this neckline break? I want to see this neckline break happen at this entry zone. Now, what does it look like? Now, let's say for instance this zone, because these zones of entries, we pick them from bigger time frames like 4 hours, daily, weekly, 1 hour time frame. That's where we pick these zones. 4 hours and daily gives us more for day traders, right? Daily and weekly are for swing traders. Zones from those particular time frames are for swing traders. Then 30, 15, those ones are for scalpers and all that, right? So that's that. Okay, so now all these particular points, what do I want to see? I want to see this neckline break from here. Now, what does it look like? If this zone is from 4 hours, I go to 50 minutes. From 1 hour, I go to 5 minutes, and also compare it with what 15 minutes most of the time, because 15 minutes is more stronger. Now, what do we want to see? I want to see market come to this particular point on the smaller time frame. Let's say this is a 4 hour zone. I want to see market come to this particular zone. Then I want to see a reaction to the upside first. Now, yes, 1 hour, it's like 4 hours, it might just be one candle playing around, but on the smaller time frame, multiple candles are printing on that particular level. So I want to see market come to this particular point. Then do what? Push up, right? Once it push up, I want to see a minor retracement. Yes, this is what I want to see. I want to see a minor retracement back to the downside, right? Then once it creates structures like this, I do what? I mark out this little high, this new high it created, right? I mark out that particular new high it created. Let me zoom it very well. Right? I want to mark out this particular high. Then what do I want to see now? According to the structure of an option, market is permitted to do what? Take out highs. So I want to see market create a structure of an option, which is I want it to take out this high. Now I said it's only in an option that market is permitted to take out high. So once it takes out this particular high, it should signal something to me that this market is now printing what looks like an option. And now an option is more like an up move, which is like a buy move. So and also I'm expecting a buy move of this particular point. So first off, the candle that breaks out of this neckline, this line here we draw it out, I want to see a good bullish candle, right, to take out this particular point. So once I see that good bullish candle close, the body should close above this line. Once it closes above this line, then my entry should be on the next candle. I see it opens and starts retracing. My stop loss below the candle that breaks out. Make sure that if the candle that breaks out started from here, which is close to the line, then you make sure you give it enough space so that in case market comes back to retest this place, it won't play you out, right? Then your target might be the next zone or any other frequent zone that might be from your left hand side, right? So that's one. Okay, so now first off, this structure is an early entry because why? Remember I said if it's coming down and all of a sudden it takes that, it creates a high, takes it out, it needs to take out the second one to give you extra confirmation. So this first move is like an early entry, like okay, since we are ready to take the risk, proper risk management, I take the first entry. So it's only when it takes out the second one that it gives you extra confirmation that this market is going up. So this is the structure on how I trade gold using the first wave pattern. So now let's go to the chart and let me show you what this particular pattern looks like. Now let's delete everything on this chart and let's go to a particular time frame, maybe 1 hour, maybe 4 hours, and look for a zone and then use it as an example. And let's see, maybe a recent one on this chart here, this 1 hour time frame. Okay. So a CA zone here, this is the fourth wave pattern here. So, but most of you won't really understand, except those that understand the strategy very well. This is a zone from 1 hour time frame. Okay, so this particular structure now, if you want me, let me show you. I think one of my students sent a screenshot of this, so you also see that I'm not joking. It's the fourth wave pattern. I'm not capping here. Let me show you. One of my students sent it to me this morning and said he caught that particular move this morning, this same fourth wave pattern. Now let me show you. Let me do a quick screenshot. Let's do a quick screenshot. So the guy said, my boss, I cashed the fourth wave pattern. This is it here, so that you see that we are not capping here. So now those that are a bit advanced, those are the ones that stops looking for confirmations. We just go straight to the point and boom, that's all. Right? So now let's go back to the screen. So this is that fourth wave pattern, right? A breakout, it didn't go really fast, starts pumping in. So here won't hold, right? So that's that structure of that fourth wave pattern. If you go to the 30 minutes time frame, that's where it becomes more clearer. Let me just explain it a bit. So we see a breakout here. It didn't go far, then it starts pumping in. So here won't hold, here won't hold, the next zone would hold. That's that structure. Now this is that point of entry. So those looking for extra confirmation, you now go to the smaller time frame, like 5 minutes or 15 minutes to look for extra confirmation. So there you go to where I said 5 minutes away, or you go to 50 minutes. Sometimes I compare it with 50 minutes just to get perfect entry, right? So now this is what I said I want to see. I want to see a go to that zone, right? And what I want to say, see, it was creating, taking out lows, taking out lows, taking out lows. So all of a sudden, I want to see that change of structure here. It push down, it push up, create a neckline, come down again. Then what happened? We mark out the neckline, right? So once we mark out the neckline, I want to see a good bullish candle take out that particular point. You see this engulfing here. Then all of a sudden, this bullish candle took out that level. Then it means that your entry should be on the next candle and your stop loss below the candle that broke out, because all of a sudden the market started taking out highs. So that's it. And your target should be where go back to 30 minutes time frame, the recent high, right? Or beyond, right? So your target should be where this recent high here. All these zones here, all these frequency levels too, right? So they say that's 1:7 risk to reward. Let's go back to 5 minute time frame. Okay. So this is it here. Okay. So pull down, create a neckline, then took it out, entry. Now this is the second one. Now I said it's only when it takes out the second one that you know that it's extra confirmation this market is not coming down again, it's going up straight to TP. That's when you can, because this is how this market should behave, right? The worst that can happen is maybe retest here and starts pulling down again, right? So that's for this particular stock. So what you will do for me is that you go back, analyze this, check out different zones, use other of my videos, and then come back and let me know what you think.
Well, that's it for today, right? If you learned something, do well to hit the subscribe button, like this video, and share it to those future gold traders, those that are really interested in trading gold. And also, if you need other resources that could help you, right, and in learning how to trade gold, you could go straight to the description box. You see the link for this Traders Bible, and you want to get one copy for yourself, right? And see you guys in my next video.